What is happening, everybody? I'm Sean McLaughlin. That's Steve Straza, your world travelers. We're hitting the road 1 week from tomorrow, Straza. We are hopping on a 16-hour flight to Singapore. How do you feel about that?
Me and you, baby. I can't wait. What what are we going to do, or what should we do about the flow show?
That's a good question. I think we should do it. We could
Yeah,
do
me
it
too.
together in the same frame.
What if yeah, all right, we'll be there with a video crew, so we'll figure it out. But like we could even do it on Twitter Spaces if we had to.
We might. Yeah, well, I think we should do it. We might have to do it in a different way. We'll improvise. We've got the tech. We can make it work.
You got
Anyway, look, before we jump, this is the Follow the Flow show where we dig into unusual options activity and see if that leads us down the road or down a path into some interesting trades. But before we do that, you and I were just talking right before we went live. I'm looking at the S&P. I follow the S&P very closely. I trade index options around the S&P, sometimes much to my chagrin. I'm a little bit of a junkie in that area. But anyway, I watch it pretty closely nonetheless. And I don't know. Call me hopeful, call me what you want, but I'm watching the price action over the last week in the S&P, and I just feel like the market is like it's like a balloon that's been held underwater for a little bit of time now, and the force or the person or whatever you want to call it that's holding the market down is starting to weaken a little bit. That arm is getting tired, and as soon as they lose a grip on that balloon, I feel like this market's going to pop right back up north of 444, which was the highs for this bull market rally a couple of weeks ago. And I feel like it's going to happen quickly. I don't know. Am I talking crazy, Straz? Do you have any feel on this? What are you seeing?
No, I mean, this is like some of the biggest corrective action we've seen in months. Actually, you can look at like these minor pullbacks in April if you have a chart of SPY there. But at the lows this morning, we were down more than 2.5% from the closing highs from last week. And this would have been the biggest correction since you would have to go back to February of this year. So it's been a while. I know it's only 2.5%, but we maybe if that reversal pattern is in place, the path of least resistance is now higher. You're seeing a really strong bid, and the corrective action is kind of taking place. It's being very brief and tight when we do get it. So no, I'm on board with that.
Yeah, I mean, I think a big reason why I feel this way is that a lot of the positions that I'm in that are bullish positions, I feel like they've been holding in pretty well, all things considered, during this brief pullback in the market, and that just tells me that no one is in a hurry to sell here. If anything, people are just patiently waiting for an opportunity to buy. But the problem is, patience works until it doesn't, and then FOMO kicks in. And I just feel like that when this thing turns around, it's going to turn around quickly. I could be wrong. I've been wrong before, Straza, but I feel like my spidey senses are saying we're going higher shortly and quickly.
I'm 100% on board with you. When we look around just like at the price action in the strongest groups, right? So whether it's XLK, we ran right into the old all-time highs and are pulling back now. You look overseas, right? Europe has been stronger than the U.S. So look at something like the German DAX or France's CAC 40. Ran right into the old highs, pulling back now. So like we're at such a logical level. Large cap value, one more. A lot of people wouldn't think. S&P 500 large cap value, IVE, made new all-time highs, pulling back. Like we're at just a very clear resistance zone for the strongest groups. So it's a very logical level to get like this kind of corrective action. But at the same time, when we look beneath the surface, there's so many positives. We don't want to make the bet that it's going to be too deep or too severe of a correction.
All right, so there we go. Thanks for supporting me. I like that. All right, so let's get into the flow report this week. Anything standing out? I'm noticing I feel like the first time for a while, but maybe it's just selective memory. But I feel like first time we've seen some bearish activity on the unusual options flow.
So Anne Marie was talking about also, I think, zero DTE options on the morning show the other day. Did you see her? Did you hear her?
Yeah, I did.
Yeah, you guys got to get in touch.
For sure. In fact, she and I did talk a little back channel on Twitter, direct messages just after her appearance.
She's in the chat now. I think she's saying, what do you think about sideways motion over the summer? Yeah, if you look at the year-to-date returns, even at the index level, but particularly in the strongest stocks, we could do nothing for the next 2 quarters, and it would still be a great year. for a lot of these
Well,
groups.
not only could we do nothing through summer, but I think that would actually be very constructive for this bull market. If we just went sideways from now until Labor Day, I think that would be very bullish long term. What do you think?
Yeah, we're also seeing more and more evidence that rates might simply go sideways for a prolonged period of time, or a longer period than they've already been going sideways for. And that would kind of support that narrative, right? So right now we have a dollar that's kind of stuck in a sideways range. Like, sure, we got downside off of last year's peak, but we've really been in a range all year. In the dollar, we're also kind of in a prolonged range in something like the 10-year, and also rates over in Europe. Those two things from an intermarket perspective were the big headwinds that came off and kind of became tailwinds at the end of last year when stocks started to rally. If they just go sideways, maybe stocks go sideways. It's just a digestive period for everything. And we start back up in a little while. That makes sense.
Yeah. Sure. Hey, speaking of people in the chat, Nikki, I see you talking about Tesla, and Tesla's the one position that's been coming back on you. Yeah, I see that, and I just pulled up the chart right now. But man, what a run Tesla has had since I don't want to say I'm responsible, but the day I bought one share of Tesla back on May 5th, it's been nothing but rallying ever since.
You picked the bottom. Hey,
right there, right? See that green candle right there on May 5th? I'm not saying my one share is responsible for the huge rally, but I bought on that day at the open that day because we've talked about this in other venues. I'm rehashing myself for some of you, but my family recently purchased a Tesla and we took delivery of it on May 5th. And kind of as a celebration of taking delivery of our new car, we bought a share of Tesla for my 8-year-old son's retirement, not a retirement account, but my 8-year-old son's trading account. And he bought one share, and look at that, man. We marked the bottom, or not the bottom, but we bought the breakout.
He's really the one who gets the credit for that buy, though, right? I think it's your son, not you.
He gets the credit, man. He was loving the car, and we talk about all the time that as a family, for his trading account, we like to invest in shares and companies that we as a family spend money on. So I'm trying to teach him about markets and investing, so if a company we spend money on regularly, that's what we want him to buy shares in. And so we bought the Tesla. He loved the car the minute he saw it, and he's like, "Dad, have we bought stock in this?" And I said, "No, we haven't." And boom, we went away and did it.
I got to be honest. I just love that you're doing that. I think that's one of the best lessons, and it also not only is it a good lesson, it's very real. Right. There are so many examples. Actually, I was just talking about it with my father. We've both been in Uber for a while now, and that was the same thesis there. But it also kind of reinforces a mindset of just keeping it simple, like not overthinking what we're trying to do here. Do you use it every day? Do you love its product or service? Oh, yeah, then it's probably a good stock, right? And most times it is. So.
And becoming it, and this is not meant to be an episode about Tesla. By the way, these shows are fully freeform that Straz and I do. Other shows that we do, we have an agenda, we have a plan, we got slides that we're going to go through. But this Follow the Flow show is totally improvised. We make it up on the fly. We go where the flow takes us. And right now the flow is taking us to Tesla. So let me finish my thought on Tesla. You mentioned, if you use a product and you're happy with it, it's great. One thing that I've become more aware of now that I actually own a Tesla is there is a lot of revenue streams that people don't talk about for Tesla as a long-term investment. Their charging network, I mean, you see it in the news. All these companies are jumping on board. I just saw that Rivian, which is the truck maker, they are now going to make Tesla their standard. Ford and GM are jumping on board. And, yes, it's cheaper to charge your car at a superstation than it is to fill it up with gasoline, but that's still revenue that Tesla's starting to bring in all over the place, and that's going to be recurring revenue, and no one's talking about that. That's not insignificant money.
No, and it's a great point, Sean, too. Like, of course they are, right? It's Elon Musk, and the best businesses these days generate subscription revenue. They figure out a way to keep you coming back and buying the same thing or paying for the same thing over and over and over and over again. And then customer retention becomes a thing. And Tesla, to me, it seems like, and I don't even have one yet, but I'm excited to get one in the future. And I just got a new car, so it's going to be a long time. But they're building an ecosystem. They really are. That's what it sounds like to me. Like they're building a world where just like everything in your pocket or on the screen in front of you is Apple, they want to, when you leave your house, they want to be your new ecosystem.
Yep.
to get you from A to B. And I
And
think
you know what else no one's talking about with Tesla that I didn't know until I became an owner is that Tesla has its own insurance, and you could get Tesla insurance through their app. It's so easy. And get this, which I think is kind of cool. Some people might not like, but because Tesla is a computer, the car is a computer, right? And it tracks your driving. It knows how you're driving. It knows if you're a good driver or a bad driver. Every month, your insurance premium either goes up or down based on how you're driving. So you're incentivized to be a good driver, way better than all these other companies that say you're incentivized to be a good driver, which basically means if you didn't file a claim with them in 2 years, they might give you $5 off your insurance. No, with Tesla, they know day to day, week to week, month to month how you're driving, and they see that you're driving too fast, too slow, using the brakes too hard. They know everything, and you're getting rewarded for good driving. I'm already getting rewarded. I'm 2 months into it. My premiums have already gone down. It's amazing.
Yeah, it's so cool. And I think it's exciting for consumers, right? Because like great products are rare, but they're awesome. They make our lives better. And I think Elon Musk is like very much in that category where just hitting it out of the park. The cars to me, like they just look so cool. I'm seeing the big ones now on the street. I mean, they're nice. And they have that matte paint or that matte finish. Sexy.
Yep. All right. We totally went off the rails on Follow the Flow.
Oh,
I hope people found it interesting. I see a lot of comments, so people are into what we're talking about. So that's cool.
Since we're clearly like automaker fundamental analysts now, I'm trying to turn these sounds off. Sorry, guys. I was driving home from South Florida this weekend, and I will tell you, the Carvana car towers that have been full now for the past 5 years, probably all over along the Florida Turnpike, they're all empty.
What does that mean? Are they actually making car sales or what?
I'm just saying I did my boots on the ground research. I pulled my weight this weekend. I don't know what everybody else did. I don't know if you ate at Cava or not, or what you guys did. But.
No, I've been meaning to, and I keep forgetting. It's a little out of the way for me, but there is one in Boulder. I'm going to go. Forgive my ignorance. Is Carvana used cars or is it new cars?
It's used.
Okay.
They're like a broker.
Gotcha.
You could sell to them, and then they have like an inventory that you could buy from, and they advertise that in these big towers. They look like giant elevators. It's like an elevator, but a parking garage, and it's all glass right on the highway. It's like a billboard, and they put cars in it.
That's crazy.
They keep them there. So
I don't think they have those here in Colorado. If they have, I haven't seen them. All right, look, we're already starting to go long, so let's wrap this up. But let's finish with something options related, something to give people what they want. Yeah. Here's my take on what's going on in the options market. I just think in general, and I think this broader market pullback is giving us a great opportunity. With VIX just continuing to get back down, get down into the 14 handle, even in 13 handle. If you are bullish like we are, and if you think that this market has another leg coming, across the board, wherever you're looking, it's becoming more and more affordable and more advantageous to keep it really simple in the options market and just buy calls, whether you're buying at the money calls or out of the money calls. Now, this is not true for every stock in every situation, but generally speaking, there's a lot of opportunity here if you're bullish to really position yourself cheaply and get some good leverage if you get one right. And so that's kind of what I've been looking for over the last couple of weeks, and I'm continuing to do so.
You know, can I just tell you that is just such sweet music to my ears? Because I know
you love buying calls.
To just get long via calls all the time. So that's good. This is my kind of environment, is what you're saying. Right. So I have, you'll never guess, a familiar name on our list this week.
Oh, let me guess. DraftKings. I see it.
I mean, I hope the chat yells at us if we do this every week. I can't keep track anymore because we're talking about it on so many shows. But look, it really is one of the best setups out there. I'll be completely honest. Why don't you tell me about how you feel about this? Last week, I didn't know what strike or what option I wanted. I've had a position in the common and DraftKings for a while now. I've built my full position. I have what I want to own. But I think this coil is going to take off like any day now, and I want to be in the options. I didn't know which ones to buy. I bought 3 different ones. I just big splash. Just bought 3 different ones, and I'll manage them maybe. I don't know. I don't even know how I'm going to do it yet. I got to figure it out. I'm going to wait for this thing to resolve higher.
Well,
them depending on what makes sense. You can help me.
Well, I don't usually like to go short term with options just because I feel like if I give myself more time, I give myself more room for error.
Right. And
Um,
so that's a good point. Let me just finish. I didn't want to get burned in a sense where the coil doesn't resolve yet and I don't get the move I'm looking for. So while I did put some in the June weeklies, I also did August. And then I went as far out as January, and I'll probably hold those a lot longer.
Okay, I don't hate that. In fact, I think that's a good move. If it were me, and by the way, the more you talk about this trade, the more and more I've been up to it. So thankfully, the market's been letting me take my time with this one, but I'm starting to like it. And I'm thinking what I would probably do is look into September. I know you guys hate it when I bring this up, but I really feel like there's an NFL effect here, right? I mean, that's the biggest thing that people gamble on. And September, NFL will be kicking off. I feel like maybe if you go out and buy the 30 strike September calls, I mean, you could get them right now for, a buck 13, buck 10. That's
30
a pretty
strike.
good price.
That's crazy because you're getting less than what? So we're at 25 today. 20% move in 3 months, 2 months.
Yeah. I mean, I think that trade's a good opportunity. And look, if you're only paying a buck 10 and you don't want to get, you don't want to get over, if you don't think this is going to get too crazy, you're bullish, but you don't think it's going to go like just through the roof. You could sell the 35 calls against it and create a little spread, a little bull call spread, and get 40 cents. You sell them for 40 cents. So really your net cost is going to be about 80 cents to potentially be able to have a spread that'll be worth $5. There's opportunity here. I'm warming up to this trade, Straz. Maybe next week when we're in Singapore, we'll talk about it again, and maybe then I'll finally put the trade on because you'll be with me and you'll be punching me. Come on, put the trade on.
If we pull back to the base breakout level, and it's still very much a buy there, right? So like what we're doing today in today's report is we're coming out and saying it's not looking like, looking at the chart that I have up here, it's not looking like we're going to get a retest of the base breakout level at 2150, the year to date and August highs from last year. So let's devise a new way to get in if you didn't get in already. And then we're just going to buy this coil on strength, right? We'll buy the bullish continuation pattern and use the same targets. But if we do get a pullback to that 2150 level, how do you play it then? Like, would a risk reversal make sense?
Honestly, if it pulled back to 2150, I would like this trade a lot less, to be honest with you.
Me too.
If Izzy, if you got my chart up on the screen right now, on my chart, and we don't talk about moving averages a whole lot, but on my chart here, I got a 50-period moving average. That's what this blue line is here. The moving average is catching up to the stock. And it looks like it's probably going to converge somewhere around the 24 area. So if I could buy DraftKings at 24 and it holds above that moving average, I think that's where I would like it right now. If I had to buy it right now or not, that to me that's the ideal spot to buy it right now. If it pulls back to 24, that's where I'm getting at.
If the market is going to be just fine here and keep doing what it's doing, this thing's resolving higher. You're not going to see 2150.
Well, that's what I was just going to say. This is one of those stocks, and we've talked about this in the past. This is one of those stocks that if it starts moving, this thing is going to move, and it's going to move quickly. It's not a meme stock, but it attracts the same crowd. People are going to jump on this thing. If and when it does happen, it can happen fast for sure. I agree. So I'm definitely risking missing this trade, but I'm just not completely sold yet, Straza.
Before we go, the tape was strange today. I don't know if anybody noticed that, but we literally, of course, growth and value, like opposing factors, the two main factors, they are known to kind of do their own thing, but have them really move with momentum in completely opposite directions like they're doing today is kind of interesting. So like the growthier groups kind of experienced some weakness earlier today and we're selling off and making like new lows of the day. And then meanwhile, value groups and defensive groups, whether it's energy or industrials or utilities, all were trending really well and had some really nice sticks. So strange tape today. It looks like the losers are playing catch up to the winners, which is characteristic of bull markets. So not surprising to see. But I did, notice that this morning. I thought that was a bit strange. I don't know.
All right. Well, let's wrap it here, Straza. We've reached our limit. We got other things to do here. It's the top of the hour. Thanks to all of you who've been hanging out in the chat and interacting with us. That's great. I didn't even know we had that set up, Straza. This is cool.
Yeah. I love the chat. I love everybody who comes in and makes the chat fun for us. And I
Yeah.
apologize today for this little boinky noise. I don't know what forum or chat it's coming from on my system, so I got to
Well,
figure
you know
that out.
what? In future, follow the flow show, Stress. And now that we got this hot new tech involved in our show, I think we should maybe start inviting people to share what they're seeing in the options market, seeing unusual options flow, things that are moving, and we'll talk about them live on the show. Because again, this is an unscripted, improvised show, so that totally makes sense. So, all right, guys, he's Steve Straza. I'm Sean McLaughlin. Next time we do this show, we'll be doing it live from Singapore. By the way, if you're in Singapore or anywhere in Southeast Asia, in any of the big cities in Southeast Asia, let us know because we're going to be all over Southeast Asia for the entire month of July. We'd love to hang out with you. We'd love to learn from you. We'd love to have a bite, drink some snake venom with you, whatever it is we do.
No, really? Well, yeah, email us.
All right, everybody. Take care. We'll catch you next time. Bye-bye.
Bye, guys.